Welcome to our weekly webcast. If this is the first time you join us, welcome. If you've been with us before, welcome back. So I'm here on site in Southern California for one of my courses here. The setting here is the Middle Ages. It's one of my tech courses. So if this is the first time you join us, welcome. If you've been with us before, welcome back. So the way this call works is this is an AMA, meaning ask me anything. You can ask me business questions, career questions, any questions. And the purpose of this call is to help you take your career or your investment portfolio or your business to the next level. So without further ado, let's begin, and thank you. All right, first question I've got here is from Luis, who wrote, "Hi, Chris." Hi, Luis. I'm using your business plan course in Udemy. How can I add more revenue lines to Excel? Yeah, so what I'll do as I answer this question is I'll tell you about the number one driver and number one most important thing to know about forecasting financial statements for every single sector. So when you create a financial model and you're trying to forecast what earnings are going to be in the future so that you can put a P multiple on that earnings estimate so you can estimate the valuation of the company. Different sectors have different drivers, okay, different revenue line items you have to focus on. So when it comes to the cell phone market, companies like AT&T or Deutsche Telekom, etc., you look at what's called average revenue per unit, or ARPU. Okay, if you're looking at the software market, you're going to look at the price that companies charge to license the software each month on a subscription basis. If you're looking at the biotech industry, you're going to look at FDA approvals and where the company is in terms of clinical trials, in terms of getting their drug or their product closer to market. If you're looking at the restaurant sector, it's a little bit different. You look at what's called same-store sales. And so you never give a restaurant or any franchise credit for opening up tons of new franchises because they could take on a lot of debt that way. We look at organic growth, meaning growth that is created internally, meaning same-store sales. So for example, McDonald's does not get credit from investors, ticker MCD. They don't get credit from investors for opening tons of restaurants. They get credit for growing each restaurant year over year through same-store sales. And so many years ago, probably about 15 or 20 years ago actually, McDonald's revenue growth really slowed a lot, and each store wasn't growing year over year. And so investors weren't that happy. And so what they did to make investors really happy is they introduced items that would increase the revenue growth year over year for same-store sales, organic growth. They introduced coffee. They also introduced breakfast 24 hours a day. They also started serving food after 11 p.m. They offered free Wi-Fi, and they did other things as well to increase turnover in their stores. So what McDonald's does, it's fascinating, is the chairs that you sit in most McDonald's are created from this hard plastic that's really uncomfortable to sit on for more than 20 minutes. So it gets you up and out of the restaurant faster. Starbucks does the same thing as well when it comes to same-store sales. They focus on growing revenue per store year over year. Now, when it comes to commodity companies, what you do is you look at the price and volume. And if in doubt, whenever you're forecasting financial statements for a company and trying to model revenue, what you do is you try to see if the price of the item is going up and the volume is going up at the same time. And if you have additional questions about revenue drivers, please let me know. In terms of breaking it down for a financial model, for example, in my Udemy course, there's one revenue line item. You can easily just add a second one. Just copy the revenue line item you see there, paste it below, okay, go down about 20 or 30 columns, and then just make sure that you include both revenue line items when you're forecasting the future. Now, the whole exercise of forecasting financial statements, what we're trying to do is we're trying to take revenue, which is the top line, that's why they call it the top line, minus expenses, so you can get to the bottom line, and the bottom line is earnings. And once you forecast what your earnings per share are in, say, 5 or 10 years, then what you do is you put on a P multiple on your earnings estimate in 5 or 10 years, and that's your target price. So what PE multiple should you put on a stock that you're doing investment research on? Well, it's all relative to the sector, but more importantly for me, it's relative to earnings growth. And so the S&P 500 roughly has an average PE of, let's just say 14 or 15 times. And the S&P 500 has earnings growing historically at roughly 14 or 15%. And so if you take the PE divided by the earnings growth, meaning 14 or 15% growth, you got 14 or 15 times earnings divided by 14 to 15% growth. That equals 1. And that's a PEG ratio, price earnings to growth of 1. And so as you're forecasting your earnings estimates in the future, let's say between year 4 and 5 in the future, or 9 and 10 in the future, whatever that earnings growth rate is, you can make that your PE multiple target. So if earnings are growing, let's say at 10% between year 4 and 5 in the future, then what you do is you take earnings in year 5 and you slap on a 10 multiple, and that's your target price. And that's called a PEG ratio, price earnings to growth. And what you will find is that using the PEG ratio methodology, it's a simplistic way to start, but it will really help you understand how to value companies today as well. So for example, and I've got a knock on my door. Give me 1 second. This never happens. Hold on 1 second. What's up? I'm doing my webcast. My bike's out of battery. It is? Okay. All right. You want to borrow it? You want to borrow the other one? Sure. Okay. Okay. Just take it all day. It's okay. All right. Thanks. Sorry. Sorry about that, guys. I've got 3 boys. That's my youngest one, Dylan. His e-bike's out of battery, and he's borrowing my bike. Okay. All right. So yeah. So back to price earnings to growth. Sorry about that. But back to price earnings to growth. So whenever you see a company that's trading at a really high PE multiple today, it means that usually its earnings are growing faster than others. And so if you see a company that is trading at, say, 20 times earnings, it means and should mean that investors expect earnings to growth at 20%, to be at 20%. If you see a company that's earnings are growing, say, 10%, then it really should trade closer to 10 times. And what we do is we value these companies based on our earnings estimates many years in the future. And the reason we do that is because we don't really care about earnings this year or next year. We care about the long term, because as Warren Buffett said, the longer the view, the wiser the intention. Thank you. And sorry about that interruption there. Okay, let me get to the next question here. All right. Renvir from Mauritius, how are you? Good to see you. So Renvir is one of my silver MBA students, and he was able to get a massive customer by networking and going to shareholder meetings. And so the best way to meet, and I think you met this CEO in the real estate sector. Good for you for doing that. So one of the best ways to meet CEOs, and I love going right to the top so you don't mess around, you don't waste time, because CEOs are decision makers. The best way to meet CEOs is to go to shareholder meetings. And you can always just do a search on investor relations and the company name that you're doing research on, or the company you want to meet, where you want to meet the CEO. And anybody can go to these shareholder meetings, and hardly anybody goes. And so what I've done in the past is I've gone to a lot of shareholders meetings, and right at the end of the shareholder meeting, before the CEO leaves, she or he makes sure that they are the last ones to leave, because they want to set a good example for board members in the audience or other executives in the audience as well. So what I do is I go up to the CEO and I introduce myself, and you can do the same thing as well. And if you talk to the CEO for a couple of minutes and then say, I'm really interested in working at your company in the human resources department or whatever it is, they might say, sure, no problem. Please reach out to John Smith. And what you do is you follow up and send an email to John Smith or whoever it is that heads up HR or the department you want to work at, and say, I met with your CEO today, and he or she told me to reach out to you. So that's what I recommend doing. I know it's a simplistic way to do it, but I promise you it works. And for those of you that work in sales, which is many people, you go right to the top always in order to talk to the key decision maker. It works. And that's exactly what Renvir did in Mauritius. I got a couple students in Mauritius. So Renvir wrote here, I'm currently working on a strategy to spot a potential short squeeze. Okay, and for those who aren't familiar with the short squeeze, It means when a stock goes up a lot because hedge funds that bet against it are worried and they're getting out of the way. And probably the best example of a short squeeze was in January of 2021. GameStop, one of the meme stocks, ticker GME, GameStop went up 31.4 times in the month of January alone. It was crazy. And the reason why GameStop went up so much and so quickly was because a lot of hedge funds were shorting it. They were betting against it. And slightly positive news came out, which was Ryan Cohen, who is the chairman, was getting more involved in the company. He's like a retail activist investor from Montreal. So what happens is this. If hedge funds are short a stock, and too many hedge funds are short at the same time, if a little bit of positive news comes out and the stock goes up a little bit too much, then they freak out and they get out of the way. And the best way to monitor this is through what's called the short interest ratio, and I'll show you in a second. But the short interest ratio is a ratio of the average daily volume of the stock divided by the number of shares that are shorted. And if the average daily volume of the shares divided by the amount that's short is 10 or above, then hedge funds freak out. And I'll show you where to get this information in a second. They freak out and they all cover because it became a crowded short. So the way to find out if a short is crowded is you go to Yahoo Finance. Okay, so let's go there together. And I'm going to type up GameStop here as well, ticker GME. Here we go. Good. All right. GME. And I'm going to show you how to calculate the short interest ratio. Okay. So what you do is you go here to statistics. Good. And then you're going to go down here to the short interest ratio right here. Okay. So the short ratio, oh my gosh. I have not seen the short interest ratio this high on GameStop since 2021. Wow. Right now, it's actually 23.48. So that means it will take, wow, you could see a massive short squeeze on this one in the near term. So that means it will take about 23 or 24 days for all the hedge funds to get out of the way, meaning cover their shorts, meaning buy the stock back. Wow, I haven't seen this high in a couple of years. That's crazy. Okay, so remember the magic number is 10. Okay, so the way it's calculated is these are the number of shares that are short. Shorting is the opposite of buying a stock. You're betting it's going to go down. Okay, so you take 57 million shares, and then you divide that by the average daily volume. So let's do that. All right, so 57 million shares, and let's go here and look at the average daily volume. The average daily volume is right here. Okay, so that data is a little bit off right here, but still it's a very high short interest ratio. Yeah, okay, wow. But what happens, generally speaking, is when a stock does not go down on bad news, hedge funds that are short it, mean they're betting against it, they freak out and they cover. By the same token, if you're long a stock, meaning if you own a stock in a company that repeatedly releases good news and the stock doesn't go up, then a lot of hedge funds will sell that stock that own it. Because if a stock doesn't go up on good news, then perhaps it's a crowded long. Too many people own it. And the same thing vice versa with a short there. Yeah. Okay. And then, so you wrote here, I'm working on a strategy to spot potential short squeezes. My thesis is that if I short, the short ratio, which I just showed you, is high enough, then the shorting fee starts to increase, then people will be forced to cover their shorts. Can you tell me ways to improve this strategy? No, I think you got the right idea. There's a couple things to look at in terms of understanding if there's going to be a short squeeze, meaning hedge funds are going to give up and cover the stock, causing it to go higher. Number one is you look at the short interest ratio, which we just did. Okay, and you always got to double check the data. It's not always perfectly accurate on Yahoo Finance. Check a couple different finance websites as well. So the magic number is 10. If there's more than 10 days to cover the short interest ratio, then start looking at it as a potential short squeeze, meaning the stock could go up a lot. Another thing you want to look at to analyze if a short is crowded and it might squeeze to the upside, meaning hedge funds will cover, is you have to qualitatively look at the chart and then go back and look at all the press releases over the past couple of years, and especially the 8Ks, which is the earnings report, and try to understand if the stock did not go down, on good news, meaning positive press releases. And one data point doesn't make a trend, but a couple does. So if you notice that there's been multiple negative reports out on the company and the stock doesn't go down, maybe it goes up a little bit, then you might be able to conclude with the SIR, short interest ratio, being over 10, that you could get a stock squeeze. But you always have to understand why the short interest ratio is high, right? So if the company has a lot of debt payments to make and they're likely going to miss their debt payments and potentially declare bankruptcy, then yes, maybe it makes sense that the stock is heavily shorted. So you always have to do the research. Now, you're in my MBA degree program. So if you go to the 4th semester in the Economics Management and Strategy track, if you go to EMS 4-2, that's Economics Management and Strategy Semester 4, Class 2, there is a 100-step template I created for you to analyze any stock. And that will help you understand if the stock is oversold and might actually eventually lead to a short squeeze. Now, what I also just mentioned there was oversold. And let me show you what that means. Now, whenever you analyze companies, I always want you to do it in this order. I want you to look at the fundamentals first, the valuation second, and then a distant third is technical analysis. And so when you're looking at technical analysis, if you notice that the RSI, which I'll show you in a second, is very low, meaning around 20, then the stock might see a dead cat bounce, okay, meaning it might go up. If you look at the RSI and you notice it's 80, really high, then the stock might go down. Again, I caution you all about this. Please look at fundamentals and valuation first. So let's go here just for fun to, I don't know, the chart of GameStop, I guess, since I got it open here. All right, so I'm going to go here to full screen chart. Okay, try later. And I'm going to get rid of my face in the corner here so you guys can see stuff. Okay, cool. Then what you do is you click here on indicators. Okay, you click here on RSI. So 80 is overbought, 20 is oversold. And this doesn't always work. That's why you got to look at fundamentals and valuation first. Okay, so right here, you see that right up here, you see this? When a stock is high on the RSI, it could pull back. It doesn't always. Like right here, it was overbought and it might pull back a bit. And by the same token, if a stock is oversold, meaning getting closer to the 20 line like it is right here, you could see a dead cat bounce and hedge funds will cover it. Again, this doesn't always work, which is why I want you to look at fundamentals first, valuation second, and then technical analysis a distant third. Yeah. Okay. So you might also, Renvir, look at the short interest ratio in addition to the RSI when you're analyzing if a short squeeze is going to occur. And when it comes to doing investment research, what I'll do actually is let me show you the best way to do investment research on stocks, in my humble opinion. Okay, so in my MBA degree program, you can learn more about this by going to harounmba.com. What I do is I give you all the tools and templates you need in order to be able to come up with your own opinion on whether or not a stock is a good long or short candidate. All right, so let me go right here. So it'll take me a second to open. And this is one of the many different templates I provide you with. And I'll never tell you what stocks to buy or short. I humbly want to teach you how to fish instead of providing you with a fish so you can eat for a lifetime. That's a quote from my idol. Okay, so right here, what I've got, Renvir, again, this is from EMS 4-2 for any of you guys in the MBA program. There's 30 steps here to analyzing a stock. Okay, you've got qualitative, quantitative, and a financial research here. So each one of these steps, okay, and there's 100 steps to analyzing a company, okay? Each one of these steps, I ask you a bunch of questions. And on every single tab, you can click to watch a video in line 20 or so on how to do this step. But you fill in all the details on a stock, okay? All the details. And then what's created for you are three things. Number one, and this is for you to do investment research. Number one, you've got a dashboard here, and there's no macros in this file. It's about 30 megabytes, not too bad. Number one output is you have the dashboard here of visualizing everything about the company. Okay, and this is based on the 700 or 800 questions I asked you to enter in this template. Okay, that's number one. Number two is an executive summary. Okay, and if I hit the print button here, you'll see the executive summary here comes out. There's three parts: fundamentals, valuation, and technicals. You can print it as a PDF. fundamentals, valuation, and technicals. And the third thing that comes out of this is a detailed 150-page Microsoft Word report on the company. And so you answer all these questions I have on these gazillion different tabs here, okay? And then those three outputs are created for you, including the target price, which is based on your estimates here on your income statement, balance sheet, and cash flow statement forecasts. So again, I will never tell you what to buy, but I'll provide you with the tools so that you can decide. And please never listen to anybody on television telling you what stocks to buy because they're biased. The worst thing you can do is watch a CEO or a mutual fund manager on CNBC or any TV show talking about stocks or companies and then buy the stock. Don't do that, because CEOs are the best salespeople in the world, and that's how they became CEO. And the fund managers or mutual fund managers that talk about their stocks on television, of course, they're biased. Okay? And I always want you to do your own research. Otherwise, what will happen is you'll sell the stock at the worst time. You'll panic when it goes down. And Warren Buffett once said that the New York Stock Exchange is the only store in the world where consumers sell stuff when it goes on sale. Think about that. Yeah. All right. And be long-term focused. And please don't try to invest based on technical analysis only. I promise you it doesn't work. You have to look at fundamentals and valuation and technical analysis, because stocks go up and down for random reasons. You know, like semiconductor stocks might go up because Nvidia or Intel chip, reported good earnings. That might drag the whole sector up. Or the entire market might go down because of saber-rattling between Biden and Putin, for example. You got to be long-term focused. And each month has only 20 weekdays, meaning 20 trading days, 20 days when the market's open. And stocks go up and down within 20 days or a month or so for random reasons, and you'll be fooled by randomness. And there's a reason why we can't really name very many traders that are successful longer term, because they don't exist. You got to be long-term focused. The longer the view, the wiser the intention. Okay. All right. All right, next up, I've got Movid here, who wrote, "Hi, Chris. Hey, I want to know, is it important to learn the Bloomberg Terminal in terms of the hedge fund industry?" Yeah. So for those of you not familiar with Bloomberg, it's financial services software. It's a company that was started 40 years ago by Michael Bloomberg, who was fired by Merrill Lynch, and he certainly got his revenge. He's a billionaire now. You don't need to use Bloomberg in order to invest. I can show you just about everything you can do on Bloomberg right now on Yahoo Finance. Okay, like for example, in Bloomberg, if you type in OMON, that's Options Monitor, you can find out about options prices. You can do that on Yahoo Finance as well. You can do all this stuff for free on Yahoo Finance. I used to pay thousands of dollars per month for people on my team at my hedge fund for Bloomberg. You don't need it. However, the one thing I would look at is Bloomberg GPT. So what Bloomberg has done is they've kind of created their own AI product based on their 40 years worth of data they have in the company since it was founded by Bloomberg 40 years ago. And Bloomberg GPT is going to be an unbelievable product. So I can't really comment on it yet because it's not really publicly available for everybody yet. But instead of looking at the Bloomberg software itself, I would take a look at and monitor developments when it comes to Bloomberg GPT. Yeah, it's like Chat GPT, but for financial services. Okay. And I have a course coming out very soon, which is going to be added to my MBA degree program on artificial intelligence. And you'll get this book for free as well as part of it. And Luca Ennison, who's probably one of the smartest people I've ever met, I just drove him to the airport last night. He stayed with me for a week, and we created a course together, which is going to come out in a couple of months. Right. And we talk about Bloomberg GPT as well as Chat GPT, machine learning, and how to do all that stuff in Excel, etc. It might be the longest course I've ever made, so please look for that. Yeah. All right. All right. Next up, Thomas. How are you? Thomas is from Sweden. Congratulations. He just graduated from my MBA program this past week. May 31st, you got your degree. That's right. And so Thomas calls me Chich because he found out that that was my nickname growing up. My parents used to call me Chich because I couldn't say Chris. I said Chich. Yeah, because CH is Ch. So Thomas wrote, "Hi Chich, heartwarming to be here. Great to see you, buddy." You wrote, where can I get the fancy frame with the golden letters as shown in the last graduation class for my MBA certificate? It looks dope. Yeah. So I'll show you right now really quick. You can go to Amazon and order a frame for your degree. Your degree is 8.5 by 11. The PDF I sent you. The frames are about $20. In terms of the gold letters, what you do is just do a search as well on Amazon for gold letters, and you'll be able to put this on if you want to as well. And what I can also do if you want is I can send you the Photoshop file for this as well if you wanted to print this out, the black outside as well. Thanks. Okay. Let me put this down here. And congratulations again. Okay. Next up we have Dario. Oh my God, it's been a while, man. Dario, I hope you're doing well, bud. Every time I see your name, I always say, it's me, Dario. Yeah. Good to see you, bud. All right, so you wrote hugs from Italy. I hope you're doing fantastic. Likewise. It's been a while. Hope you're doing well. Question here is, what do you think about the current regulatory environment regarding cryptocurrencies in the United States? Will Coinbase move to Ireland? Yeah. Now a lot of people talk about Ireland because the federal tax rate there is only 11.5%, and so a lot of semiconductor companies have fabs and operations in Ireland because of this, and a lot of payment companies do as well. A lot of payment companies were founded there, like Stripe, for example. So it's great from a tax perspective. I don't know. I don't know if Coinbase would move there. Because I think that all major economies are going to be regulating cryptocurrencies longer term. Now, the issue with cryptocurrencies is that whenever you invest in them, you don't get an IPO document like this. So this is for Facebook, ticker Meta. So before you go public, you have to file what's called an S1. Okay, it's an investment offering memorandum, and it's created by investment bankers. That was my first dad joke of the day. Sorry. By investment bankers and lawyers, and tells you all the risks, etc. And this is regulated by the SEC, Securities and Exchange Commission. The problem with cryptocurrencies is they're not regulated by any governing body yet, right? They're kind of regulated by the laws and physics of mathematics, if it's a legit crypto. And so what's going to happen is very soon, the SEC is going to regulate cryptocurrencies so that before you raise money through a crypto, like raise $1 billion through an ICO, initial coin offering, you'll have to file one of these things. And there are a lot of lawsuits against cryptocurrency companies in the United States right now because of this. The SEC is suing Coinbase, as you know. There's also a case in the Southern District of New York where Ripple, ticker XRP, is being sued by the United States government because they raised $1 billion without filing one of these things. And so what's going to happen within a year, I think, is the SEC is going to regulate all cryptocurrencies. And I think that's going to be a good thing for consumers, okay, because there's so much fraud in cryptos to the extent that I had to get my Instagram account verified because people were pretending to be me. So it's going to happen. Now, what happened last year was there was a bunch of cryptocurrency companies that got together. They were lobbying government officials to regulate cryptos as a commodity, okay? And if cryptos were to be regulated as a commodity, then what would happen is the government agency in charge of options and commodities, the CME, for example, agencies like that, would regulate cryptos, which means that you wouldn't have to have massive disclosure documents like this. But now the SEC is going to regulate it, so this is coming soon. Yeah, and that's a good thing for everybody, I think. Yeah, because most cryptos are an absolute scam. Yeah. And if anybody here is going to invest in cryptocurrencies, if you're going to buy the cryptos, what I want you to do is please don't store them on a hot storage wallet, meaning up in the cloud. And it's called hot because it requires power to be used. The internet requires power. I want you to store them on a cold storage wallet, meaning a little USB token made by a company called Ledger Nano, for example. And when you buy these tokens, okay, these little, it looks like a USB thing. The Ledger Nano, for example, don't buy it from Amazon. Buy it directly from the source. It'll cost you a little bit more, but at least you know it's legitimate. Because if you leave your money up in Coinbase, for example, or in a hot storage wallet on the internet, if those companies go belly up, and a lot of them will, you'll never get that money, ever. Also, if you're going to invest in cryptocurrencies, please don't make cryptos more than 5% of your portfolio. And don't make any one crypto more than 0.5%. Because I promise you, most cryptos are a scam. I've done a ton of research on them. Most of them are a scam. There's a lot of great ones, but there's a lot of crap out there. Yeah. Okay. All right. And then Dario wrote, I always see regulatory activity with respect to cryptos as a positive. In this case, I see it as more as a confusion. Yeah. I would never invest in a publicly traded company that didn't file a document like this, right? So I only recommend investing in cryptocurrency companies that are regulated by the SEC, which is coming soon. Yeah. And it's a good thing for us. Yeah. So what happens usually with government regulation is whenever there's a massive crisis of confidence or a lot of people lose money, then regulation comes. So in the 1920s, we had the stock market crash. And then by 1933, the SEC was created. In 2001 and in the year 2000, stocks pulled back a lot post the dot-com bubble bursting. And so regulation was created called Regulation FD, Fair Disclosure, to protect us. Then what happened was in 2008, we were within 24 hours of bank machines not working. And as a result, Barney Frank and other Congress people created new regulations as well. And with cryptos, in the past year or so, a lot of them going belly up and scamming people. New regulation is going to be created because of that for obvious reasons. Yeah. And you can't just go offshore and still be fraudulent. I mean, look what happened in the Bahamas last year. Yeah. All right. Next up, I have got a question here from... Okay, Dario wrote, the other question I have is, what do you think about the book called The Black Swan by Taleb? It seems amazing to me. It's great. It's great. So Nicholas Taleb, and I quoted him earlier today, I don't know if you caught it. He's this incredible Lebanese author. My mom is Lebanese. And so he wrote this great book called The Black Swan. The Black Swan basically talks about random events that you couldn't forecast because there aren't very many black swans. They're mostly white. And so a black swan is an event that occurs that causes the market to pull back. So the notable black swans over the past 20 years or so were 9/11. You couldn't forecast that. Also, we have COVID. That was a black swan event as well. And it's important to be long-term focused. That's why I took out of that book. Be long-term focused because these random events can cause massive economic shocks and cause the market to pull back. Now, earlier on today, I mentioned Fooled by Randomness when I was talking about technical analysis. That's another great book by Taleb. And he talks about also being long-term focused when you invest because stocks go up and down in a short period of time because of random events. And we don't want to be fooled by randomness. We want to be long-term focused. Okay, and then you wrote, P.S. You are oh, thank you for that. God bless you. Thank you. I love my students. All right, next up we have Scatterpie, who is Simon from Bulgaria. It's been a couple of months. Good to see you again. You wrote, hi Chris, Simon here. Sorry I've been quiet. Just wanted to say a big thank you for all your support. I launched now and I have partial ownership of a bank and a gold fund with massive returns. Awesome. I'm very happy for you, man. Very, very happy. This is my gold, plastic. It's fake like me. I'm a fake teacher. Yeah. And by the way, congratulations. But gold is doing well and it'll continue to do well, in my humble opinion. And yes, I own it because there's a lot of talk now about the United States dollar longer term, maybe not being the world's reserve currency. So if you're the Chinese government, you're probably not going to be buying as much US dollars in the future. You're probably going to be buying more gold. And that's another reason why certain cryptos have gone up as well, because cryptos are kind of thought of, at least some, as digital gold, like Bitcoin, for example, which I do own. Yeah. So if the United States dollar is not the reserve currency in several decades, I think it will be. But if it's not, if there's speculation it won't be, what do you buy? Well, people will just kind of invest in gold. And the United States dollar used to be based on gold. And then in 1972, Richard Nixon, remember that guy? I'm not a criminal. Richard Nixon took the US dollar off the gold standard. And that was the year I was born, 72. I'm dating myself. And the US dollar is backed by the full faith and credit of the United States government. And currencies are all relative, right? So one currency goes up versus another one because of relative reasons, right? One country might raise interest rates, or there could be a crisis of confidence in a certain country, causing their currency to drop relative to others. But the United States government is the very last company on the planet that would declare bankruptcy. It's all relative. And that's why the United States dollar has been, the world's reserve currency. And we'll know that the United States dollar is no longer, the world's currency, or I should say the lowest risk currency, if when analysts are valuing companies and they're discounting future cash flows, if they no longer use the US dollar for the risk-free rate, or US 3-month treasury. Yeah. Okay. Congratulations, Simon. I'm really happy for you, man. Really happy. And you wrote, I'm also working with a large fund of funds on the things we spoke about. I'm so happy for you, man. Awesome. Okay, and I hope your daughters are doing well as well. And last time we spoke, I think you talked about creating a 3D printer for little pieces to go in your daughter's dollhouse. Good to see you, man. And say hi to your mom for me too, please. Yeah. Okay. Next up, Durs wrote, hey, Chris, what do you think about trading, specifically arbitrage? Yeah. So arbitrage is if you see something that is undervalued, you buy it and then you sell it to somebody else. So say, for example, on eBay, I saw somebody selling this for a penny, and I think it's worth $10. It's an amiibo. I would buy it for a penny and then sell it for $10. Yeah. Arbitrage is very tough to do. Trading in general is tough to do. The smartest arbitrage investors I've worked with are the event-driven arbitrage hedge fund investors. And so event-driven hedge fund investing means an event comes up and you see something that's overvalued or undervalued, and you borrow money in order to make it no longer overvalued or undervalued. And the classic example, and I've worked on a lot of deals in the past in event-driven, is when one company buys another company, right? Let's say that Microsoft is trying to buy Facebook. I'm just making this up. It wouldn't happen, although they did try before the IPO in 2012. But let's say Microsoft announces, I'm going to make up numbers here. Let's say Microsoft announces they want to buy Facebook for $100 a share, okay? And let's assume that Facebook is, $78 a share right now. So they usually announce it at a 30% premium. So what would happen is Facebook, and again, assume it's $78, it would not go up to $100 right away. What would happen is it would probably go up to $95 or so. And the reason it wouldn't go up to $100 right away is because a lot of investors, number one, don't think the deal will go through from an antitrust perspective. And number two, there's the time value of money. So if the deal is going to go through and finally get regulatory approval a year from now, then you've got 5% left to play with to invest elsewhere. So the stock would go up to 95. Okay. And let's say that investors decided, hey, actually, I think this deal will go through. Then what event-driven hedge funds would do from an arbitrage perspective is they would short Microsoft, okay, and they go long Facebook if they think the deal is going to go through. And Facebook, if the deal goes through, will go from 95 to $100 eventually. The reason they're shorting Microsoft in this hypothetical case, which would never happen, the reason that they're shorting Microsoft is because they think Microsoft's going to have to take on a lot of debt in order to make the deal, work. And the reason they're long Facebook is because it's up, it's at $95, but the deal is going to be at $100. And they'll borrow a lot of money, these event-driven hedge funds, short Microsoft, go long Facebook. And if the deal goes through, they make a lot of money, right? It seems like a small amount, 5% or so. But if you lever up big time, like 4 to 1, it's actually 20%. Yeah. So anyway, and if the deal doesn't go through, then the hedge fund loses a fortune. Yeah. But what hedge funds do, sophisticated ones, is they use options as well. They'll buy puts, calls, etc., complex option structures, so that if the deal unwinds and does not go through, they are protected. Yeah. And that's arbitrage. Yeah. Okay. And then the question is it possible to generate a lot of wealth in a short period of time by trading? No. Be careful. Be careful. The worst thing can happen is this. Let's say you go to a casino for the first time in your life. And, I don't know, you walk up to a blackjack table and you bet $100 and you win. And then you think, oh my gosh, this is repeatable. It's not. The house always wins. It's impossible to make money from a short-term perspective. I promise you. The worst thing that can happen is you start day trading, you start making money. It will all end badly. And I say that with love in my heart, as always. You have to be long-term focused. Yeah. Again, because stocks go up and down in the near term because of things outside of our control. Okay. And then Simon wrote, Chris, talk soon. I'd love to chat. Love to catch up, buddy. And congrats on your success. Okay. Moving on to Movid, who wrote, what do you think about the banking industry in the future? And is it hard to get a job in Swiss Bank? And then you wrote, thank you. Yeah. Swiss Bank is very hard to, if you're talking about like UBS, for example, that it's hard to get into that company because UBS is basically, with the help of the Swiss government, buying Credit Suisse. And there's going to be a lot of overlap. Like, you don't need two CFOs, so one will go. And there's tons of other salespeople where there's overlap, so a lot of people will be let go. So I'd say right now is probably the hardest time in history to get a job in the Swiss banking market. It really is tough. Yeah. Yeah. And in terms of the banking industry in the future, so I think that AI is going to eliminate a bunch of jobs in financial services firms, particularly on trading floors with roles called sales traders. And I can go into more detail on that if you want me to. However, the reality is that about 75% of all jobs in big investment banks and big banks in general are sales oriented, right? That's why I always talk about networking is important. Your network is your net worth. And I don't think that you can outsource relationships to AI. But AI, what it's going to do is, and a lot of people are worried about artificial intelligence to the extent that they think that their job is at risk or will be at risk. I wouldn't worry because AI is going to replace a lot of the mundane, repetitive operational tasks that we do so that we can focus more on innovative R&D. And people are freaking out about AI, kind of like they freaked out about robotics and just-in-time manufacturing back in the 1980s. Yeah, some people did lose their jobs, but they were retrained to do something else. Yeah. Same thing with the Industrial Revolution hundreds of years ago. People thought, oh my God, machines are going to take all our jobs. I wouldn't worry about that. We always do adapt. We always do. Yeah. Okay. And I'm excited to announce that after this course comes out, which will be in a couple of months, it's massive, and it'll be added to the MBA program as an elective as well. Luca is coming back here in the fall, and we're recording the most comprehensive, best Python course ever made. And we're using a lot of props as well to make Python fun, intuitive, so you can hit the ground running and use technology to take your career to the next level. Yeah. And in my MBA program, I'm always adding new content as well, based on market changes. And that's why we worked really hard on creating this AI stuff as well for you. Yeah. Okay. All right, next up, Prashant, how are you? Good to see you. Prashant's in my silver MBA program. He's based in India. He wrote, hi, Chief, how are you? I have cleared 37 quizzes with 95% so far, and trust me, and new sessions is as if this is a mistake I've committed, but okay, yeah. So all you have to do in order to pass is you got to get over 50% on half of the 100 quizzes and email support@harounventures.com when you've done so, and we'll send you your degree. Don't look at sorry to go off track here, guys, but when you're taking my MBA degree program, don't look at the percent you've completed because it will keep going down because I'm adding new stuff all the time. Just look at the quizzes. Again, to get the degree, there's 100 quizzes. All you have to do is get over 50% on half of them. Yeah. And I set it up that way because it's not fair to make everybody take every class because some people aren't interested in learning about just finance or entrepreneurship or sales, or whatever it is. Yeah. Okay, moving on to CW, who wrote, hey, Chris, what are the kinds of services family offices require when they decide to start to move to a place in Asia where there's only stamp duty and no inheritance tax? Yeah, I'm not sure, but family offices, I wouldn't start a family office. What I would do is if you have a lot of money, I would get a private wealth manager to help you out. Now, all big firms like Goldman Sachs, UBS, Morgan Stanley, et cetera, globally, they have PWM divisions, private wealth management. And what they do is they charge you 1% per year on the money they manage for you. And it's a good deal. I know it seems like a lot, But it's a good deal because they have tax attorneys that will help you pay less in tax. And very wealthy people are very wealthy and get even wealthier because they hire tax accountants to move their money around the world so they don't pay much in tax. Now, Warren Buffett has publicly disclosed that he pays less in tax percent-wise than his assistant does. And it's not fair. He said it's not fair as well. In fact, the 400 richest families in the United States only pay about 21% tax. It's not fair. And the reason the tax code is set up that way is because you only pay taxes based on profits you make when you sell something. So in 2007, when Jeff Bezos was already a billionaire many times over, in 2007, not only did he not pay any tax, but he also got $16,000 back from the IRS because he has 4 kids, and you get $4,000 per kid, or at least he did with his taxes. It's not fair. I do think that I'm a capitalist, as y'all know, but I do think that billionaires should get taxed at the highest tax bracket, even if they don't sell shares in a given year. Yeah. Okay. All right, next up I've got here, and give me 1 second. It jumps on me sometimes. I can't do anything about it. Okay, here we go. I'm up to DF. So DF wrote, hi, Chris. I appreciate the course you offer on Udemy. Thank you. You wrote, I want to find out if an adjustment can be made on the Excel business plan for year the business was founded. It seems to go up to 2020. No. So what you'll notice is any cell that's shaded in blue it's an investment banking standard. It's hard coded, so you can easily change that. Yeah. Okay. All right. And then Patrick wrote, good morning, Chris. Good morning. When it comes to writing or publishing, meaning fiction or nonfiction, has self-publishing matured to a viable and profitable approach? Have you seen it as a step towards the big publishers? Yeah. So anybody can publish a book right now. And if you want, you guys can use my book template for free. And it's how I publish all of my 6-inch by 9-inch books that look like this. All you have to do is go to harounmba.com/write-book, all lowercase, write-book, and you can download a Microsoft Word template and create your own book as well. It's free. I don't ask for your email or anything. And also, there's 1 page of instructions to tell you how to publish on Kindle, Amazon Print, and then ACX, meaning audible.com. Yeah. Now, if you go with a publisher, and I almost did this years ago. So I've written tons of books. So if you go with a publisher, be careful because they'll own the content. So when I wrote my first book back in 2015, when I worked in venture capital, Forbes wrote an article about it saying it's one of 6 books all entrepreneurs need to read right now, along with Peter Thiel's book and stuff. But what happened was Obama's publisher reached out to me and they said, we want to publish your book. And so I got on a couple calls with them. And the problem is, and the reason I never did it, was because they would own all the content in this book, all of it. And I didn't want to set it up that way because this is my IP, right? So just be careful about that. And you'll never get rich off of just publishing a book unless you're Danielle Steele, speaking of fiction, and you sell millions and millions of copies. Right. So, but I am partnering with, by the way, you can go to my website, harounmba.com, and get this book for free on how to network to get anything you want in life. It's a free book. Yeah. But I did sign a contract with McGraw-Hill last year to publish a Finance Essentials book. And this is their Essentials series. I didn't write these 2, but I am going to publish something with them. Just because I thought it'd be good branding for me, because I do teach, and McGraw-Hill is a big textbook company. And that will come out, it's supposed to come out later this year, but I think it's going to probably come out next year. Yeah. But if you do it, make sure to have a lawyer read the contract as well, because you don't want them to own all the content in that book. Yeah. But again, you won't get rich off of just publishing 1 or 2 books, I promise you. Yeah. Okay. But I want everybody on this call to write a book. Right? And I want you to use my template too, because this is the best social currency there is. So all you have to do is this, and this is what I did, okay? For 2 years, I wrote an article every week on LinkedIn, right? That's 104 weeks. Then what I did was I took those 100 or roughly articles, whatever it is, and then I threw it into this book. And the ones that I put first, the articles first, by repurposing content, were the ones that got the most likes on LinkedIn or comments or whatever it is. And then what you can do, and tons of my students have published books. Here's one of them actually, Edward Almonte from the East Coast in Canada. He just published this book as well. It looks nice with all the blue here. Yeah. Then what you can do is when you go to informational meetings, you can give somebody your book. Or if you go to, I don't know, an interview, give someone your book. And if you think that this is too much work, then I want you to ask yourself this. How badly do you want that job? It works. I promise you it works. Now, what do you write about? Well, I want you to become a thought leader in whatever market you're most passionate about, kind of like the Rodin sculpture. I think, therefore I am. I want you to write about whatever it is you're most passionate about, whatever you're most interested in. And I want you to share your opinions on LinkedIn. Write an article every week, again, for 2 years, and publish your book. And you can also repurpose that content as you can also make those vlogs, YouTube videos like I'm doing here, as well as Instagram videos, etc. And so what my team does, what we've done for years, is based on the 7 best questions that are asked in this session, and this is the 5th year I've been doing this, based on the 7 best questions that are asked on this webcast, my team will create Instagram videos, TikTok videos, YouTube videos, LinkedIn article videos, etc. And that's repurposing content. I learned that from Gary Vaynerchuk, who's probably the best social media person that's ever lived. And so what you do is exactly what Nintendo has been doing forever. And Nintendo is the oldest tech company in history. It's over 100 years old. They weren't always a tech company. But what Nintendo does is they repurpose their older content on new platforms. So they take Mario 64, the 8-bit Mario games, 16-bit Mario games, and they put them on the Switch as well. So they're repurposing their content. And it's a way for you to work smarter and not harder. By the same token, all your LinkedIn articles you'll repurpose into your book, and all your LinkedIn articles you'll also repurpose into YouTube videos, etc. Yeah. Okay. And then Kevin, who's in my MBA program from Florida, wrote, good morning from Lakeland, Florida. Great to see you. My parents live half the year in Fort Lauderdale. They're snowbirds. Yeah. A lot of Canadians do when it gets cold, eh? Jason, good to see you. Okay. All right, next up, Prashant wrote, you talked about finding one key business driver like revenue per room for hotels. Yeah, actually, that's one I didn't mention this morning. Thanks for reminding me. So the hotel industry, the way you value those companies is you look at RevPAR, revenue per available room. And you want to make sure that revenue grows year over year for each room for hotels. You don't give hotels credit for opening new hotels because they're taking on a lot of debt. You want to look at each hotel room growing year over year. That's called organic growth. And any company you're analyzing, hotel, whatever, any company, you want to make sure there's good organic growth, meaning growth from within, right? Not acquired growth. So a hotel company, they can increase RevPAR or revenue per available room by doing things like installing a mini bar, okay, or internet access and charging for it, that sort of thing. Okay, so you wrote, you talked about finding one key business driver like RevPAR in hotels and other examples. How to find KBD drivers for other sectors, say the aviation sector or real estate sector. Yeah. So when it comes to real estate sector, you want to look at interest rates. Okay, that's going to be a big driver, kind of like it is for financial services companies. So if interest rates go up a lot, then that means that mortgage rates are going to go up, which is really going to hurt the real estate industry. So you want to look at interest rates as your key driver there. Yeah. And if in doubt, and you're not sure what the driver is, then just think about, as I mentioned earlier, 2 things. Is pricing going up and is volume going up? So if prices rise for the product you're selling, X inflation, if prices rise and volume increases, then those are 2 great drivers to think about. Yeah. Okay. And then Flynn wrote that, hey Chris, hey, I read that Steve Cohen's Point72 fund made 100 million gains in Nvidia stock just in the last 2 months. Yeah. And then you wrote, Cohen is telling investors to shrug off their fears and ride the big wave of AI. Do you share his optimism? I do. And so Steve Cohen used to work at SAC, which stood for Stephen Alexander Cohen, and then the SEC made him shut it down for good reason. And then he started at I don't know how he was able to, 0.72. Yeah. But I do agree with him in this case. Yeah. I am really bullish when it comes to AI. Really bullish. Now, when ChatGPT was released publicly back in November of last year, it really was a game changer, right? I mean, it's the most important tech shift I've seen, or catalyst, since the internet was created. It is a huge deal, and that's why I created this course, which is coming out soon. Yeah, I think it's a huge deal. Yeah, and one of the best ways to invest, and I've mentioned this months and months ago, is through Nvidia, just because Nvidia makes GPUs, and GPUs is a central component of AI, along with something called TPU, which is a product that Google created. Okay. All right. And then you wrote here, I read that Brazil and China have agreed to conduct business using their own currency and not the US dollar. Yeah, a lot of countries are talking about this now. Yeah. In addition, the EU indicated they would like to move away from the US petrodollar and use euro currency for international energy transactions. Is the dollar in trouble? Yeah. So it's one of the reasons why gold has gone up recently, as I mentioned earlier on the call. I think the US dollar will become less relevant, but I still think it will be, probably the lowest risk investment, meaning the US government, for the next couple of decades or so. Because again, the very last company to go belly up would be the US government. Yeah. Yeah. But I do think the dollar will slowly become a little bit less relevant. Yeah. Yeah. And I'm more bullish on India than I am on China longer term. Yeah. Love India, world's biggest democracy. I love democracy, as y'all know. Okay. And it's the world's biggest country now, past China. Okay. Prashant from India just wrote here, you talked about finding out if this company is more relevant in 5 years. How do you find out when pagers were launched? It was almost new technology and people were excited about mobile. Yeah. Yeah. So whenever you look at any company or sector, you always got to ask yourself, whenever you're thinking about doing research or investing in the company, in 5 years, is this company going to be more relevant or less relevant than it is today? And so the same thing with AI. I think in 5 years, AI will be more relevant than it is today. And the reason you want to do that as part of your investment research, and there's many steps, obviously, to picking stocks, but the reason you want to do that is because it'll stop you from getting seduced into buying stocks that are value traps. Years ago, a lot of people wanted to buy Yahoo because it was cheap. But you could have asked yourself, in 5 years, will people be using more Google or more Yahoo to do searches? It's like a logics test for you as well. It's like a safety net to stop you from buying value traps. And the same thing with Research in Motion. Speaking of pagers, with Research in Motion, my beloved Canadian company that makes the BlackBerry. In January of 2007, when Steve Jobs did his keynote on the iPhone, and that year Android was also released by Google, you could have asked yourself, in 5 years, will people be using more BlackBerries or fewer BlackBerries? And of course, the answer is fewer. Yeah. So I think it's a good sanity check whenever you're doing investing. Kind of like the Senate is kind of like a sober second look on bills. Yeah. Okay. Next up, we have Manas, also from India. Good to see you. You wrote, good morning, my dear mentor. Chris, please. I hope all is well. Sorry I missed last week. Luca is tall as heck, and you're way too short even after you stood on your step stool. That, and then you wrote that webcast was dope. Thanks. I'm still on the step stool now. I'm about 6 feet. This is the step stool here, and I had to set it up this way because Luca is so tall. So Luca was not allowed to wear shoes. He's tall. He's really tall. Yeah. So I moved the studio around a bit. So I was on this side here, right, on my step stool. And then he was down here, and this is our B camera here. And of course, this over here is our A camera. And the reason you want to have two cameras whenever you're recording is in case you mess up. You can always cut to the B camera if you mess up. You can always cut to the B camera if you mess up. Yeah. Okay. Yeah. No, he's great. I miss him, man. Yeah. And he's coming back in this fall. All right. You wrote... last week, my mentor, when last week AI was rude to you, I laughed myself off. That AI was really rude and to the point. I can't remember what you're referring to. Maybe you're referring to ALEXA, not being polite to me. I'm not sure. Yeah. Okay. And then you wrote, will Nvidia and other chip companies benefit from AI and advanced technology? Why was Nvidia blowing up a few weeks ago, and now we see a dumb? Hear your thoughts. Yeah. Yeah, so Nvidia, so the way that AI works is a lot of AI processing is going to be done in the cloud and not on premise, meaning not on your local computer. And the reason it's done in the cloud is because it's cheaper to do it that way, and because these AI infrastructures cost a fortune to deploy. Like, people don't realize that, Google could have deployed and released their own version of ChatGPT years ago. In fact, the T in GPT, T, which stands for transformer, that was developed and created years ago by Google. But Google did not release their own AI product to the marketplace because it would have hurt earnings by $30 billion per year. It's a classic innovator's dilemma. What does that mean? Well, in order to build out an efficient AI infrastructure, it costs about $100 billion. It's really, really expensive. And that's one of the reasons why Google didn't really deploy their version of ChatGPT years ago. They finally have started to do it with Bard, which has been a disaster. But I think it's going to be great in the long run. Yeah. But the best investments in AI are, you always want to invest in plumbing, right? Like back in the 90s, one of my best investments was Cisco, ticker CSCO, because they make routers, switches, etc., the plumbing of the internet. And so the plumbing, so to speak, or the highest value added product when it comes to AI, in data centers or cloud computing, is the GPU. Okay, and the GPU, graphics processing unit, is made by Nvidia. It's one of the companies that make it. So in the cloud, when it comes to AI, there's three types of processors. There's the CPU, and this is an old Intel chip, the CPU, the GPU, and the TPU. The CPU is not that good because it can only basically do one thing at a time. The GPU is great because it can do many things at a time. The TPU, which is a new concept, it was developed and owned by Google. It can do kind of what the GPU does, but using lower energy. But as of now, the only pure play way to invest in GPUs is through Nvidia. Yeah. Okay. And Manas wrote, the SEC is running after Binance and Coinbase, and BNB is going down quietly and quickly as well. Will this influence crypto companies to move out of the United States? Yeah. I mean, some of them might for tax reasons, and this is nothing new. There's companies like Accenture, ticker ACN, which is located offshore. Tons of tech companies do this. They move, so they pay less in taxes. That's why there's a lot of tech companies in Ireland. You pay less in taxes. But if you break U.S. laws, it's going to hurt your sales in the United States. You might not be able to sell your product in the United States at all if you fraud investors. And the United States is still the world's biggest economy. The size of the revenue on the planet, global GDP is about $95 trillion. And the United States is the largest component of that by far still. So if you upset the U.S. government or the SEC by frauding U.S. investors, which is happening too much now, and you move your company offshore, U.S. government's not going to allow you to sell your product in America, for example. Yeah. So yeah, some companies might move offshore, but if they're defrauding, U.S. investors, they're not going to be able to sell their product here. Yeah. And cryptocurrency regulation is coming, and that's a good thing. Just like how the SEC regulates IPOs, the same thing is going to happen with cryptos. Yeah. Okay. Okay. Okay, so next question is, Chris, can you look at the short interest on ticker CVNA? The short interest is massive. What could this mean? Yeah, let me take a look. Now, whenever you do this on Yahoo Finance, you always have to double check the data on a couple of different finance websites because it's not always perfect. Okay. Kind of like financial statements. You always want to look at sec.gov and not Yahoo Finance. So let's go there together. Okay, so the question is ticker CVNA. Okay, CVNA. EA Sports. It's in the game. All right, so let me look at this company here. Carvana, the average volume is 16 million shares. Let's go over here to the short interest ratio. Okay. Give me a second. No, it's actually pretty short. The short ratio is pretty short. Yeah. So 70 or 80 million shares per day. And the share short, if you take average daily volume divided by share short, is 48 million. So it's around 2. And again, this data is never perfect. I double check this. Something seems off with this here because the short interest ratio is 2.5, which means the average daily trading volume, roughly, divided by the share short. But I see that this number is a lot higher. So there's a disconnect here. So I would do research on this by looking at other finance websites as well to make sure that this number here is correct. Something seems off. Yeah. Okay. All right. Next up, Manas wrote, by the way, this is for everyone in the United States. If you use Binance, keep your tokens in a cold wallet because the SEC may freeze Binance US and assets anytime, according to people familiar with the matter. Yeah. Definitely. And I mentioned that earlier. You don't want to leave your money, your cryptos, ever. Don't leave too much in a hot storage wallet on the internet, okay? Leave it in like a USB token wallet, like Ledger Nano S, for example, which is called a cold storage wallet. Yeah. And think about, the best way to think about this, cold storage versus hot storage, is your savings account and your checkings account. So in the bank, your checkings account it's basically used for money you want to write checks from. Meaning money you want to use. And the interest rate usually in a checking account is lower than a savings account. And so a hot storage wallet is kind of like a checkings account, and a cold storage wallet is kind of like a savings account, right? You always want to have more money in your savings account, meaning your cold storage wallet, because the interest rate is higher for when it comes to leaving money in the bank savings account versus checking account, and your money is more secure in crypto land when you're talking about a cold storage wallet versus a hot storage wallet. Yeah. Okay, next up, T wrote here, when is the best time to ask for permanent residence after you join a new firm? Some say you can ask the company's policy right away. Some say wait a year or 6 months later. Yeah. Every company is a little bit different. When I worked at Goldman Sachs, I came from Canada. They brought me to the States. They took care of my visa and everything. And I was there 2 or 3 years before I was able to get them to process my green card and all that stuff. So I'd probably wait a couple of years. Now, if there are people on this call that want to leave the country that you live in to go to another country, one of the best ways to do it is to do the following. And I'm just going to make up some crazy example. First thing I see. Let's say that you live in Canada and you work at Meta, okay, Facebook. If you want to move to the United States, do a really good job working at Meta in Canada, for example, Facebook. And eventually, after 5 or 10 years, whatever it is, you'll get promoted a couple of times and eventually to vice president level or whatever it is at Facebook. And then what will happen is when you get to a certain level, there's a high probability that they're going to transfer you and move you to the mothership, meaning the headquarters of Facebook in the United States. And then at that point, you can start thinking about a visa. Yeah. And when I worked at Goldman Sachs, that's exactly what happened with me. Actually, it was right before 9/11. Goldman was really good to me. Goldman doesn't hire the smartest people in the world. They hire people that get along. But what happened was they hired lawyers to help me get my green card. And the lawyer's name was Tim Todd, really nice guy. And then 9/11 took place. And I couldn't get a green card because I was on some list because my last name is Arabic. But I was cool about it. I remember at first I was like, this is so unfair. I remember I went to Germany to meet with SAP. I landed in Frankfurt and I was going to Waldorf to meet with the CEO of SAP. And they asked me in customs, what is your ethnic background? I remember getting really upset. Total BS. But I was cool about it because when I was on that no-fly list after 9/11, I go to the airport and the lineups were crazy long at LaGuardia. I remember that. I would just go to the front of the line and the TSA, and I don't know if it was called the TSA at the time, but I'd say I'm on that list. And they'd be like, okay, cool. and they just gave me an extra pat down, whatever, right? And then I just got to hang out in the first class lounge or business class lounge, have a couple extra beers. But Goldman eventually helped me out, and eventually I got my green card. Yeah, but that's how you do it. Yeah. Okay. But it did piss me off that there was stereotyping, especially overseas. Yeah. All right. Okay, and then next question is, I think GameStop just fired their CEO on Wednesday, possibly contributing to the high short ratio. Oh, interesting. Where there's smoke, there's fire. Interesting. I didn't know that. Thanks for telling me that. Yeah. The reason that GameStop went up about 30 times or so in January 2011 was because it was a crowded short, and also because Ryan Cohen became chairman of the company, and he's from Montreal. He's a brilliant guy. And he's an expert when it comes to retail turnarounds as well. Yeah. Okay. And also in January of 2021, a lot of hedge funds were short GameStop because there's a pandemic in place, and a couple of things working against GameStop. Number one, if all the shopping malls are closed, then you can't buy video games from GameStop. And number two, longer term, are we going to be downloading games or buying physical games? Probably downloading, which would hurt GameStop. Yeah. It just got crowded, though. Yeah. And I've been involved in squeezes in the past on both sides. Yeah. Okay, next up, Tucky wrote, Chris, any advice about breaking into IT would be appreciated. It seems it is more about networking and who you know rather than what you know. Yeah, absolutely. So what I recommend doing is if you don't have any IT experience, start taking tech courses online from people like Angela Yu, who's probably the best teacher online about just learn about how to program in Python, etc. Take her courses. She's dope. She's great. Secondly, and more importantly, your network is your net worth. And what you need to do is the following. Get a list of 3 or 4 tech companies you want to work at. Then what I want you to do is have a perfect LinkedIn profile, which I explained in the first semester of my MBA program. Have a perfect LinkedIn profile, and then set up informational meetings with at least 20 people from each company you want to work at. And in the first 10 minutes of that networking meeting, I want you to bond. Same thing with interviews. I always want you to bond before business because relationships are more important than product knowledge. So how do you bond? What the hell do you say in these meetings? Well, what you can do is go to their Twitter profile of the person you're going to meet with, and find something you have in common with them. If they're baseball fans, you can talk about baseball. This would be a great baseball card photo right there. And I do that quite often actually. I'll go to somebody's Twitter profile before I meet with them, and I'll find out what they're interested in. If it's baseball, I know what to talk about. In fact, when I got my job at Citadel. I remember it was in July of 2004. They flew me to Chicago for the final round of interviews. And I met with a guy named Carson Levitt. And at the very bottom and he started, along with Peter LeBon, Citadel's equity division, big hedge fund. And Carson looked at the bottom of my resume, and I wrote, I love baseball on the resume, whatever. And so the first thing he did was we talked about baseball for about half an hour. And then he hired me. And then I worked for Carson, and then my mom gave me this as a birthday present when I was a kid. It's a broken bat by Andre Dawson. And I brought this baseball bat into my office. And in 2007, Carson Levitt called me at home. And my wife said, honey, your boss is on the line. I was like, oh my God, am I going to get fired? What's going on? And Carson said, Chris, I'm in a restaurant here in San Francisco. The All-Star game is here this year. And I just saw Andre Dawson. Do you want me to go back to the office and get your bat? And I left the bat in the office and get it signed by Andre Dawson. And I was like, hell yeah. Yeah. So anyway, he got it signed. But that's kind of a long story to tell you that you got to bond before business and go to somebody's Twitter profile to see what they follow and really just connect with them, because you'll never get that second chance to make that great first impression. And so the way to know who to meet with for those 20 informational meetings per company is do an advanced search in LinkedIn and find things you have in common with people. Maybe you're from the same hometown as they're from. Maybe you went to the same high school or same undergrad, or you're member of the same group. And then you send them an in-mail. And the contents of your email should be as follows. And don't send an email because nobody opens emails anymore. But you've read every in-mail you've ever received. So have I. So what you do is an in-mail, subject line hi, contents of the message should be as follows. And less is more. John, hope all is well. I'm also from Mississauga, and I also went to the Toronto French School, and I also live here in the San Francisco Bay Area. Please let me know if you have time for a coffee or a Zoom call. Thanks a lot, Chris. You keep it simple. You don't say why you want to meet. Just list things in common and then meet with them. And you might think to yourself, why would they even meet with me? Why would they take this meeting? Well, think of it this way. Let's go back. Let's assume that it's 20 years in the future. And you're way more successful than you are today. And somebody reaches out to you that's very similar to you. Same background. They went to the same high school, same hometown stuff. And they asked to meet with you. Would you take that meeting? Of course you would. So ask and you'll receive. It's prophetic. It's been true since the beginning of time. People want to help you. All you got to do is ask. And if you want to learn how to network better, just go to my website, harounmba.com. Download this book for free. Yeah. Okay. All right, next up, My Ideal Voice. First time seeing you on the call. Welcome. Wrote, I have purchased your Udemy course. I want to take my business to the next level. Thank you for that. I appreciate it. Thank you. And Udemy, of course, an important partner of mine. Okay. And then Manas wrote, as far as China is concerned, it's creating a domestic market for its products so as to reduce international dependence. Yeah, it's true. What if China becomes so big they're unstoppable to be a global power? Yeah. Well, China is growing quickly, obviously. The issue is that China's growth can never slow too much. Otherwise, I think there might be a little bit of civil unrest. Yeah. But my hope is that globalization continues to the extent that America is reliant on China and vice versa, and all countries are dependent on each other, which basically will ensure there's peace globally. Yeah. Okay. Next up, Prashant wrote, many congratulations for the new pillar. Thank you. And he wrote, I must say, after the Excel is machine learning and AI, that you're covering Python and R or only Python. We're starting with Python, but we are talking about doing R as well. And of course, I'm partnering with Luca Anderson. And Luca was mentioned by Google as one of the top 150 machine learning and AI experts in the world. Yeah, he's great. Wicked smart. Yeah, and a good guy. He's just too tall. Or I'm just too short. Yeah. Okay. And then Renveer said, Chris, can you suggest to me some M&A courses? I don't know of any really. I know you're in my MBA program. What I would do is I would take all the lectures in the FA track. That's finance and accounting. And that should help you out. If you want to read something theoretical, there's a professor named Damadorian, and you could read his books. He's good. So he's an NYU professor. And years ago, when I worked at Citadel, I spent a half hour with Ken Griffin, who's the billionaire founder, in his office talking to him one-on-one. And whenever I meet with somebody in their office that's more successful than me, which is every meeting always, what I do is I look at their bookshelf. And I looked at Ken Griffin's bookshelf, and there were books by Damadorian. And so, of course, I ordered those in the elevator on the way down from Amazon. So Damadorian is a professor of finance at NYU, and I'm sure he has books on M&A. Yeah. Okay. Moving on to Asunda, who wrote, hi, Chris. I'm based in South Africa. Good to see you. How are you? I have a lot of students in Johannesburg. And you wrote, your business plan course on Udemy is amazing. Thank you. And helped me to fine-tune the plan. I'm still busy with it, but it's coming along nicely. Awesome. Thank you. Thank you. And failing to plan is planning to fail. And most people don't write a business plan. And it's the most important decision you might make in your life. Because if you don't think about your business model and you don't write a business plan properly before you start, you can go bankrupt, your health will suffer, and your relationships with your loved ones can suffer as well. And so planning to fail is failing to plan. So what I do, and the way you know you have a good business plan, by the way, and a good business model, is if you finish the business plan. It's not guaranteed it's going to be great, but if you finish it, it means you've completely vetted the idea. Most business plans that I write, I never finish because most of them are awful ideas. But if you finish one, the probability of it being successful goes up. Yeah. And I want to save you guys money too. And I want you guys to outsource everything. And so when you think about creating a business plan, think about you just focusing on skill X, which is what your company does, and outsource everything else. Because what happens is this. A lot of people work at big companies and they get paid a certain amount of money for doing skill X. And so they think to themselves, well, that's not fair. I'm going to quit and just do skill X and make way more money because I'm being underpaid at this big company. So you quit and you start this company doing skill X. And you fail to realize, we fail to realize, that the reason why you were getting paid a certain amount at a big company to do skill X, which you charge as much for, is because all the infrastructure is covered for you at that big company. So you start your company doing skill X, and you don't have time to execute or focus on skill X because you're worried about, filing taxes and doing social media marketing, fixing the printer, doing IT support, etc. That's why you have to write a business plan first, so that all these additional skill sets or operational stuff in your company, you can figure out how to outsource it before you start that company of yours. And I say it with love in my heart because I care. Okay. Next up, Manas wrote, 12 states in the United States are suing Coinbase now. It's all on attack on Binance and Coinbase. My mentor, Chris, please. If these two go down somehow, will it give governments the opportunity to launch CBDC Fed now? Yeah. I think the United States government will be one of the last countries, first world countries at least, to launch a crypto because monopolies don't really need to innovate too much. Yeah. I think they'll wait. Yeah. Okay. Okay. And then you wrote, is stagflation good or bad long term? It's awful. Yeah. It's inflation with no economic growth. And that's what happened basically in the late 70s, early 1980s. It was awful until Reagan was elected. Yeah. But in the Carter administration, it was just disastrous. And I remember in the early 1980s, I was a kid growing up in Canada. We had my dad on our house, my mom and dad, the mortgage was 20%, right? It was really high interest rates. It was awful. And the economy wasn't growing. And in Canada, you can't write off the interest in your mortgage either. So it was brutal. And if interest rates get really high, what happens is people think, hey, I'm just going to put my money in the bank or buy bonds and get a good return risk-free, basically, instead of buying stocks. So the stock market was terrible in the stagflation days of the late 70s, early 80s. And no companies were really founded, because nobody wanted to take on any risk. So stagflation is always deadly. Yeah. Okay. All right. Next up, Chibike wrote, hey boss, Chris, please. You wrote, great to see you, and I hope you join us again. You wrote, I just finished MHS, thank you. And then you wrote, thank you so much. The investment portfolio dashboard alone is worth more than what I paid for the course, going to get the business plan course next. Thank you so much. And MHS is Morgan Haroun Sachs, which is the pretend company from that complete financial analyst course you took. Yeah, thank you. Thank you. Okay. And then next up, Manas wrote, those who can't do teach, and those who can't teach gym class. Yeah, that was a Woody Allen quote years ago. He said, those who can't do, teach. And those who can't teach gym class. Yeah. I love teachers. Okay. And then Omran wrote, hi, Chris. What do you think about day trading in a fund account in Forex? Yeah, I say with love in my heart, don't do it, please. It's deadly because what causes in foreign exchange, what causes certain currencies to go up and down is due to stuff out of your control. It could be saber rattling between Putin and Biden. We have no idea. Yeah, it's rough. Yeah. Okay. And even Silicon Valley Bank, it was one of the most prestigious banks on the planet here in the United States, I should say. All venture capital deals I've worked on, most of them, whenever you want debt financing to be done, we talked to SVB, and I met with the founder and CEO of SVB years ago, stand-up guy. But even that bank wasn't able to do FX properly, which caused them to implode. Yeah. Okay. Which broke my heart. Okay. It really is the perfect storm in venture capital right now, man. Okay, and Jatan wrote, why are statements which are free from material omissions and errors called unqualified opinion? It is counterintuitive. It makes more sense to call it qualified. Yeah, I don't know what that means. That could be legalese in a financial statement that you read. It also might be due to the fact that those financial statements have not been blessed yet by the auditors, right? So they haven't been audited yet. And you always want to make sure that you understand who the auditor is in a company. Yeah. Make sure it's a large, reputable firm like KPMG or PwC, et cetera, or Ernst & Young or Deloitte. If it's a lesser known auditor, I usually stay away. Yeah. And that might be unqualified, meaning it has the financial statements haven't been blessed yet by the auditor. Yeah. Okay. What is the difference between staff and participants in the context of an FOMC meeting? Yeah. So there's a certain number of Fed governors that all report to the head of the Federal Reserve. And what happens is they have these FOMC meeting, Federal Open Market Committee meetings, and then every couple of weeks or so, they'll release the minutes, meaning just the transcript of the call. And so I'm assuming that staff means that the Fed governors and participants might be non-Fed governors in that press release, but I don't know. I'm just assuming. Yeah. Okay. All right. And Manas wrote, China is a $23 trillion economy with $1 trillion in debt. The United States is a $25 trillion economy with $33 trillion in debt and more. What is the difference between OPEC cutting oil production by 5%? Yeah. Yeah. So the United States does have a lot of debt, and it always has. Yeah. And one of the reasons is after World War II, the United States basically became Europe's bankers and loaned a ton of money to Europe. And since then, it's just the U.S. has been issuing a ton of debt to different countries and buying debt globally. And just the U.S. dollar is seen as the last resort, the very last currency to go belly up, so to speak. Now, in terms of fiscal policy going forward, I think the United States government's going to be a little bit more careful with debt. They kind of got out of control during COVID, during the pandemic, issuing too much. But hindsight's 2020, and those were desperate times call for desperate measures. We had no idea what was going to happen with COVID. So I think cutting rates to zero was the smart thing to do. The problem is, though, that we have to be long-term focused to the extent that when things are good, the government should be raising rates. Because if you don't do that, then when things are bad, you can't cut rates to jumpstart the economy. Flood the market. This is fake. Flood the market with more dollars. Yeah. So again, when times are good, you need to raise rates, meaning put more money back in the gun, right? So if there's less money out there, then the demand for money goes up, interest rates go up. And you need to do that. You got to raise rates when times are good, so that when times are bad, you can cut rates by flooding the market with dollars. Yeah. Yeah. Okay. Manas wrote, who according to you is the best president of all time in the United States? It can be someone from recent times or 100 years ago. If possible, could Ray Dalio be a good president if elected? Yeah. Whoa, a couple questions there. I'd say Lincoln has to be the best president of all time. Yeah. Yeah. In terms of, and I won't speak for all of the policies of Ronald Reagan, but I certainly respected the fact that he helped to beat communism, and he got the U.S. economy working again after the disastrous Carter administration. Yeah. But I do love Jimmy Carter, and I actually met him. He came to Columbia, where I went to school. I met him, and he signed a book as well for me, which is pretty cool. And when I was lining up to get his autograph, what happened was there was this guy from. There's this guy from Pakistan in front of me, and he was from a small village, and he was asking Carter. He said, There's war breaking out in my village. Can you help me? And the Secret Service came up like this and said, sir, please stand back. And Carter was so awesome. He said, no. And he took the guy and he talked to him for like 20 minutes one-on-one. It was so awesome. I love Jimmy Carter. Yeah. But I would say Reagan, from a business perspective, was great. In terms of Ray Dalio being president if elected, all right, this is going to sound really shallow, but usually, the person that becomes president is the person you're most likely to be able to sit down and have a beer with. And so it's all relative. It's all relative. You know, I think Ray Dalio is kind of a bit like Mitt Romney. And you could read between the lines there. Yeah. Okay. And for those of you not familiar with Ray Dalio, he is the founder of Bridgewater, which is, I think it's the largest hedge fund in the world. I've had friends that have worked for him. It's a really rough place to work. It's really, really rough. I heard, I can't confirm this, that the annual turnover is about 40% in terms of employees leaving. And also, every single meeting is recorded at Bridgewater. Like every conversation you have with everybody, everywhere is recorded except for in the bathroom. Yeah. Talk about living in fear, man. Okay. All right. Question is swaps. High level introduction, please. Yeah. So basically, it's insurance contracts on debt. That's the easiest way to think about it. Yeah. Okay. And the reason they're called swaps is because there's no real platform you can buy and sell them on. It's basically just I exchange this to you and I'll swap it for that. Yeah. Okay. Credit default swaps. Okay. And it's kind of like it's insurance policies on debt. Yeah. And if you want, do a search on AIG and CDS, credit default swaps. And so what happened was back in the fall of 2008, we were within 24 hours of bank machines not working. AIG, which kind of insures debt, they went belly up. And they were the most important company that insured debt. Yeah. Okay. All right, next up, Manas wrote, a dam in Kherson was blown up, flooding the state. Putin is not going to stop anytime soon, and only a few countries have opposed it. When will this thing end? In 10 years or a century? Yeah, I was telling my kids, when the war first started in February of last year, they said, when will this war end? And I said, honey, it could be decades. I mean, the first Cold War started in the late 1940s and ended around 1990 when the Berlin Wall fell. And so, Putin did his thesis in university, his degree in geology. His thesis was, how strong could the Soviet Union be, USSR at that point in time, if they controlled, oil and gas? And that's their currency now. And so Putin was against Russia or the USSR breaking up through, glasnost or perestroika under Gorbachev. He was very much against it. And so he kind of wants to put some of it back together now. So I don't think it's going to end anytime soon, unfortunately. It's very sad. Yeah. Yeah. And it's interesting because living in the United States, we think here that, oh my God, the whole world is against Putin. But they're not. Only like a third of the world has been vocally against it. Who? North America, Australia, Europe. That's it. That's it for the most part. But other countries really haven't gotten involved. Yeah. But I really do hope it ends soon. Yeah. Okay. I despise communism. Yeah. I despise anything that's a limit in terms of what my students can achieve in life. Yeah. That was a limit. Yeah. And this is you. Yeah. This is you up here. Okay. And then Manas wrote, thank you for everything, my mentor. See y'all next week and forever and ever and ever again. Let's push the goalpost. Oot. You're saying it in Canadian. Thank you. Thank you. And thank you for the emojis. And God bless you, brother. Yeah. Thank you. All right. All right. And then Prashant wrote, Okay, you're writing a comment to somebody else. Give me 1 second here, guys. Momento, por favor. Sorry for the dead air here. Give me 1 second. All right, hold on a second, guys. Sometimes YouTube will stop here. Here we go. I found it. All right, next up, DF wrote, Chris, you are the best. Thank you. God bless you. I've never had a teacher spend so much time responding to the many great questions that come from your students. Absolutely awesome. Thank you, and God bless you. I love doing what I'm doing, and thank you to all of you, because when one teaches, two learn. And that's how I learn, actually, is through a lot of great questions. You guys always have great questions. Thanks. All right, next up, Satons. Mark, how are you? Mark graduated from my MBA program a couple of years ago. He's based in Detroit, and he's moving to Arizona soon. And he's a brilliant man. So Mark wrote, hey, brother, hope all is well. Shout out to the global MBA gang. Great to see you. Have you heard of a product launch costing $100 million? Yeah, there's plenty of them that do. Windows 95, the iPhone costs $150 million initially to launch, etc. Yeah, there's plenty. It's usually very large tech companies that do it, and a lot of it comes through marketing. Little side note, interestingly enough, have you ever seen a Tesla commercial? Neither have I. Elon Musk is brilliant because he is controversial, and he uses controversy to sell. That's how he sells. It gets brand recognition for Tesla as well as SpaceX, etc. Yeah. Okay. DF wrote, the questions from your students are great. Thanks everyone for teaching me from the questions and answers that take place. I agree completely. Again, when one teaches, two learn. And that's why I want you guys to mentor other people as well. Don't just look for mentors at your own company, which we need. We all need Yodas. But what I want you to do is mentor others. Because when you mentor other people in your company, people younger than you or more junior than you, you kind of reinforce, what the blueprint for success is. And it keeps you in line as well. It keeps me in line. Okay. All right, and then Ralph wrote, hey, Chris, what kind of content are in the technology pillar? Yeah, let's go there. This will be fun. All right, so you'll see why I'm doing this. Give me a second. All right. All fake gold. I'm a fake teacher. In my MBA degree program, and you can go to harounmba.com to learn more, there's 5 pillars, or 6 pillars now. The first one is finance and accounting, where I teach you everything about finance and accounting from scratch. The second one is entrepreneurship, where I teach you how to launch a company, and there's a venture capital boot camp as well. Moving on to sales, marketing, and communications, where I teach you how to sell, do marketing, and all that stuff. Next up, we have economics management and strategy. Then we have personal growth. And there's one more somewhere. Damn it, Janet. Must have fallen. Yeah. 1, 2, 3, 4, 5. There's one more. I can't find it. I think it fell down over there. But the last one, oh, here it is here. I found it. All right. The sixth pillar. And this will be my YouTube thumbnail. So what I'm going to do, and for those of you that do these webcasts and stuff or record any YouTube videos, stay still for a minute or a couple seconds, and that's your image thumbnail. So let me smile. And I'll do this side as well. You guys will see that. That'll become a thumbnail this week. Okay. The sixth pillar is technology. And so in the technology pillar in my MBA degree program, I teach you everything about Excel, every single function in Excel, every icon, every menu item, etc., and how to program in Excel. And I also teach you everything about artificial intelligence. And what we're also adding, and if you bought my MBA before, or if you buy it now, you'll get all this stuff for free forever. It's a one-time payment, that's all. We're also adding Python. We're going to likely add R. That might be next year, but Python should come this year as well. We're also going to be adding Power BI, Tableau, and tons of other technology products so that you're not just one small step, but one giant leap ahead of your competition. Yeah. Now, for those of you in the MBA degree program, if you want to access the how to program part in Excel, what I recommend that you do is go to my website, harounmba.com, and then click right here. And then depending on which MBA you bought, most people are silver. And I'm not launching another gold or platinum one until next year. But you click here to access the Excel portion of the MBA degree program. Or you can buy the Excel course here by clicking it if you want. Here's all my courses here. Yeah. Okay. All right. It's fun to teach with props, eh? Okay. And I use a lot of props when I teach how to code. And the best way to learn how to program is start with Excel, and I showed you how to access that link. And the reason it's a great way to learn how to program is because in Microsoft Excel, what ships with Excel is something called Visual Basic for Applications. And basically what that means is this. When you're using Excel, you hit the record button in Excel on the developer menu. And then you do whatever it is you want to do in your spreadsheet. Create a chart, make certain data bold, insert a column, do calculations. Then you hit stop. And then you go and look at the code that was created for you in Visual Basic for Applications. And then you can manipulate the code that way. That's the best way to learn. And the way I teach it is with a lot of props as well. It's object-oriented. Yeah, it's fun. And I was a programmer for years. So back in the 1990s, between 1994 and 1998, I worked at Accenture, where I was a programmer. And I subscribed to the Microsoft Developers Network for years and years and years. I beta tested products for Microsoft before they were released. And on the side, I've been coding for years as well. It's my true passion. I do love it, yeah. Along with finance and teaching and, yeah. Okay. Okay, next up, yeah. All right, good to see you, Prashant. And I hope to see you, Prashant, today at 10, if you can join it in 15 minutes or so. Every Thursday from 10 until 11 my time, we do a 1-hour Zoom Q&A with my silver students only. And for those of you in my silver MBA, just go to the first lecture of the curriculum to get that link. Yeah. Okay, moving on to Samuel, who wrote, for your next MBA class starting next year, are you willing to compromise on the time that the classes will hold? Yeah, it all depends. Like I got to put my family first. But right now I've got a couple of classes running. So we just finished the Wednesday class that started last June. It just finished last week. It was from 9 a.m. until noon every Wednesday. I have a Friday class that I started last September. That's 9 until 3 my time. And I currently have 2 other classes running. One that I started May 1st and one that I started January 1st or January 30th. And those are on Monday, Tuesdays. Yeah. One session is 9 to noon. The other one is 4 to 7 at Pacific time. Yeah. But I can't do other times other than that because I do have to spend time with family and my wife. Yeah. As much as I love it. Yeah. Yeah. And in terms of one-on-ones for platinum times, I'll never change that. Yeah, it's always going to be the one-on-one meetings will be every Monday, Tuesday, and Thursday between 1:30 and 3:30 p.m. Pacific time. Yeah, that will never change. Yeah, and for those of you for those of you that have signed up for platinum and gold, I'd love to meet you in person. If you want, you can come to the annual graduation event, and the way to learn more about that is go to my website. Go to my website here, and then right here. You click here, August 12th and 13th is graduation. And it's going to be here in the Bay Area. And if you want to learn more, just click right here and then log in using the password that I provide you guys with in class. Yeah. And if you're a platinum member, you get half-hour one-on-one meetings as well in person with me. Again, that's August 12th and 13th here in the Bay Area. Okay. All right. Next up, GBK wrote, for sector drivers, you stopped at restaurants. Can you continue? You did telecom, biotech, software, restaurants. Okay, and I did hotels as well afterwards. Somebody asked about RevPAR. Let me think if there's any others that I can talk about. If in doubt, you just think, remember I said you think about pricing and volume. If price goes up and volume goes up, usually those are 2 good drivers. Yeah. But I think I talked about all sectors. Financial services and real estate, somebody asked, we talked about interest rates. Biotech, we talked about FDA approval, clinical trials. If there's another one I left out, let me know. I'm happy to go there. Yeah. Okay. And when I talk about retail, that's restaurants and retail stores too. Yeah. Like Walmart, ticker WMT. Okay. Are you still using Meta for meetings? Are you bullish on Meta? Yeah. So I did one webcast for fun from the Metaverse just to test it out. I'll show you what it was. So if you go to mbametaverse.com, Metaverse should be spelled MEH Taverse. Metaverse. Yeah. So if you if you want, you can just scroll down here and just click to watch the replay of it. Apparently in the future, people don't have legs. Yeah. But I did this from during that class. You could check out mbametaverse.com. I'll do something in that area longer term. But the issue is when it comes to Metaverse, Facebook has kind of reinvented themselves and rebranded themselves as Meta. And there's a couple of reasons why. Number one, Zuckerberg really believes in the Metaverse longer term as the next platform. That will make sense. And you always want to invest in platforms and own the roads so you can charge the cars. Also, another reason that Facebook rebranded themselves as Meta is because I think that Zuckerberg knows it's only a matter of time until the Department of Justice, the DOJ, breaks up Facebook into multiple companies. And so I think Meta is going to be the umbrella company that owns the brands like Facebook, Instagram, WhatsApp, etc. The same thing with Google. Google rebranded themselves sort of as Alphabet years ago because Google knows it's only a matter of time until the Department of Justice breaks Google up into separate companies because Google is a monopoly. They're too powerful. And I don't care. I say that right here on YouTube. You're my customer, not Google. And so Google owns the two biggest search engines in the world, Google and YouTube. Doesn't seem fair. So eventually it's going to get broken up into multiple pieces. Now, when it comes to the Metaverse, and I'll talk about Apple now too. I'm sure there's going to be a lot of questions about Apple's VR product. When it comes to VR and AR, and VR is basically headset where you can't see stuff outside. AR is you can see both. But with VR, the problem is that 40% of people that try virtual reality goggles report motion sickness after 30 minutes or less than 30 minutes. And Facebook had like a $20 billion deal with the DoD, Department of Defense in the United States, so that people that work in the Department of Defense can test out military applications, airplanes and stuff using VR headsets, using Oculus actually. And 80% of the people in the Department of Defense that use the Oculus headsets reported motion sickness. It's a big problem. And if anybody's going to nail it, I think it's going to be Apple in terms of a non-motion sickness product. Now, the problem with Oculus, and I've tried the new one as well, you can put on the VR goggles and you can kind of see, it's like a screen that will show you what's really in the room. But it's done in 720p. The resolution sucks. It's not realistic at all. Now, what Apple is doing is the resolution is actually 4K per eye with their new product they just announced. So apparently it's amazing. I haven't tried the product out. It's coming out next year in January. We knew the product was coming though because of patents. So if you go to USPTO.gov, that's United States Patent and Trademark Office.gov, you'll see that Apple filed 5,000 patents for that thing, right, over the past couple of years. So everybody knew the product was coming. It actually, the pencil drawings that they drew on that patent website are identical almost to what the product really looked like when they released it this week at WWDC, Worldwide Developer Conference for Apple. So in terms of the product, let me first of all talk about the elephant in the room. It's way too expensive. It's ridiculous at $3,500. Obviously, that pricing point will come down materially. It'll probably come down by 50% within 5 years of the product being released early next year. Now, I think it's going to be the best VR experience and AR experience out there because the way it's engineered is, it first of all, it looks so cool. Secondly, it's got like 12 cameras on it. And the user experience, according to Marquise Brownlee, who's my favorite vlogger, I haven't tried the device yet, but he has. He got a half hour with it. It's unbelievable. So you use your hands to double tap stuff and open up icons, and it follows your eye everywhere. So if I'm looking at an icon there, say I'm looking at an icon, and I go like that, it'll open up that application. And SIRI works incredibly well as well, apparently. One of the issues, though, is that when you're doing a FaceTime call with it on, what happens is before you use it for the first time, the device, you turn it around and it scans your face. And then what happens is when you're wearing it and you're doing FaceTime calls, it will mimic your face, right? And according to Marquise Brownlee, again, my favorite vlogger, it doesn't really work that well. It's kind of artificial. It's not real. But what I love about the product, and I saw the same keynote that you guys gave, and it was brilliant how Tim Cook did it. At the end of the presentation, he said, and just, we have one more thing, kind of like Steve Jobs did with the iPad Nano years ago. They had the most unbelievable video on their headset showing you watching movies, and you can make the screen as big as you want as well when you watch it. And you can have the background on as well so you can see the surroundings in your room, or turn that off. Put a nice lake behind it if you want to. It looked unbelievable. And I think if anybody's going to create an incredible user experience when it comes to VR and AR, it's going to be Apple. Now, apparently the product is very heavy when you're wearing it as well. And there's a battery, a cable goes to a battery that's pretty heavy, apparently. I've never tried the device. Nobody has except for Marquise that I know. Aside from that, it's got really good security as well because it's all iris-based. It'll scan your eye, of course. But there's no killer apps yet. I'm sure, and one of the reasons why Apple announced it now, way ahead of the release date in January, is so that developers could download the SDK, the software developer kit, and create apps for it. Now, Apple has never nailed the video game market. They've kind of tried with Apple TV, but aside from Asphalt or other games like that, there's really nothing good. Somebody has got to create killer games for it in order for this to be a mass market product, and the price has to come down materially as well. Will I get it day one? Yeah, because I'm a nerd, and then I'll bring it into the studio and show you guys during that webcast. Yeah, in January. Okay, and I'm going to be wrapping up this call in a minute here. Okay. Shabash wrote, I got an internship at a company, nice, that takes 200 interns and trades in only crypto. And they teach crypto for 1 month. Then the second month, we have to bring a client who invests $300 through their exchange advice. I'd be careful with that. Maybe have a lawyer read that, the employment contract first, because it could come across as, and please, and I'm saying this with love in my heart, it could come across as sounding like a money pyramid. Yeah. Okay. And separate side note, if anybody gets offered a job at a company and you have the opportunity to take cash or shares in the company, always get as much cash as you can and as few shares as possible. Don't say I don't want any shares because it shows like you're not loyal and long-term focused in the company. But in the unlikely event that the company does really well, most startups don't, but in the unlikely event the company does really well, the company's going to give you more shares anyway. It costs them nothing to create them. Yeah. Okay. And when you guys are negotiating a salary for your job, okay, so you never bring up, like say you're interviewing for a job, you never bring up how much you're going to pay me. But when at the very end of the interview process, when they're going to decide what to pay you or to offer you, when they ask you how much you're making now, what I want you to do is I want you to explain your entire compensation structure as follows. Okay. So let's say, well, little side note here. Say you make 100 grand base, but the company gives you, 50 grand worth of retirement matching, as well as daycare and healthcare and other items. Say it's 50K worth. That means your entire compensation package is 150,000. 100,000 base, 50K for the other stuff. So when they ask you, what is your salary, right? This is where you negotiate. You say this: my entire compensation package all in is 150,000. You start with that. Okay. Then if they ask you more questions about it, can you break it down? Then you tell them 100 grand base, 50K for the other stuff. But this gives you more leverage. Yeah. Okay. All right. Next up, Werner wrote, hey, Chris, Werner from South Africa. Pleased to meet you. Likewise. I'm busy participating in your MBA in one course on Udemy, and I'm loving it. Thank you. I appreciate that. God bless you for that. Thank you. Thank you. Starting to shine here. Okay. And by the way, if you guys do, and I got to wrap this up in a minute, if you guys do a lot of these Zoom meetings and you're shining like I am, what you can do is this. Okay. So there's powder. And my wife helped me get this from a store called Sephora. But you get powder that matches your face, or ask somebody who works in a drugstore to help you. And then you get a brush like this. And people that are in movies and television interview, like when I get interviewed on TV and stuff, they put this stuff on me. You go like this, and I'll do half my face to show you how it works. And this will get rid of the shine. I'm just doing half. Okay, you see how this side is not shining? This side is more so. You take this stuff, and ideally you want it, like I'm leaning over, you want to get a towel in front of you. We go like this. And do this before you have like a big interview on Zoom, okay? Because of all the crazy lights here. And it'll get rid of the, I'm no longer shining. There you go. Yeah. Maybe I'm beautiful. Maybe it's Maybelline. Yeah. Please tell me somebody understood that joke. Okay. All right. And then I've got here, Shivansh wrote, I bought your Excel course on Udemy. It's one notch above other courses for sure. Great course. Thank you. Thank you so much for that. Thank you. And I can't wait to show you. I can't wait to show you the promotional trailer that I just recorded for that. It's the most ambitious thing I've ever done. It costs more than all my other promotional trailers combined. It's nutty good. But I can't wait to show it to you. The development team is now developing it, or is now editing it right now. But yeah, I can't wait to show you. Yeah, 50 people worked on that. Extras, everything. I rented multiple Hollywood studios for it as well, including the same studio where Zero Dark 30 was filmed. Yeah. Okay, next up we have Pride, who I think is one of my Silver MBA students, wrote, "Hi Chris, I've been a long time. I hope you're doing well." Mrs. Haroun as well. Thank you. She's great. Thank you. Thank you. And by the way, all this talk about MBA, like I don't want you guys to get the wrong impression. It doesn't stand for Masters of Business Administration. It actually stands for Married but Available. No, I'm kidding. No, Christine, my wife, I love her. She's way out of my league. She's the only, this never comes off. Oh, I want to say a joke so badly, but I can't right now. Okay. All right. Well, let me tell you quickly how I met my wife, and then I'll wrap up today's call. So my friend Sohail, my best friend growing up, he had a party at the Granite Lounge downtown Toronto, and he knew everybody at the bar, right? They rented it and stuff. And I looked across the bar, and I saw the most gorgeous woman I've ever seen in my life. She was unbelievable. And I told myself, I got to have the guts to go up to her and talk to her. She was just beautiful. Like, oh. And I got the confidence to go up to talk to her. So I went up to her. And right next to her was Christine, my wife. I'm just kidding. That was my wife. That was terrible. Or as Charles Barkley says, terrible, just terrible. Okay, great. So I see there's a bunch more questions. If you're in my Silver MBA program, and you can find out more about the MBA program by going to harounmba.com, okay, right here, and then buy courses right here. But if you're my Silver MBA program, which is this guy right here, and there's a 30-day, 100-day money-back guarantee, 100% money-back guarantee. But if you're in this program, just click on the very first lecture to get the link for the Zoom call and webcast. So you can join me on YouTube or Zoom, and you'll see the first lesson here. The link is always there for the weekly call that starts at it starts at 10 a.m. in about 2 minutes or so. For those of you not in Silver, I'm looking forward to seeing you next week and every week. I'll be doing this free webcast every Thursday from 8 until 10 a.m. forever. And we're just about to enter our 6th year of doing this as well. God bless you all. Have a great week. Stay safe, stay happy, stay healthy. Click the like button and subscribe, please. That's what my marketing team wants me to say. and I'll see you next week and every week forever. And I end all my webcasts, this weekly call, with this life-changing, very short interview with Steve Jobs that I licensed from the Silicon Valley Historical Association. God bless. I'll see you soon, and thank you.
When you grow up, you tend to get told that the world is the way it is, and your life is just to live your life inside the world, try not to bash into the walls too much, try to have a nice family life, have fun, save a little money. But life, that's a very limited life. Life can be much broader once you discover one simple fact, and that is everything around you that you call life was made up by people that were no smarter than you. And you can change it. You can influence it. You can build your own things that other people can use. And the minute that you understand that you can poke life and actually something will, if you push in, something will pop out the other side, that you can change it, you can mold it, that's maybe the most important thing, is to shake off this erroneous notion that life is there and you're just going to live in it, versus embrace it, change it, improve it, make your mark upon it. I think that's very important. And however you learn that, once you learn it, you'll want to change life and make it better, because it's kind of messed up in a lot of ways. Once you learn that, you'll never be the same again.